You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, May 7th. I'd like to share some thoughts about Front Page Daily.
Right. And today we are really looking at the absolute extremes of South Korea's economic landscape.
Exactly. We are diving into a story of incredible scale, but also profound vulnerability. We're going to examine undeniable triumphs for you, things like a $1 trillion microchip milestone, and then weigh them against, well, massive domestic vulnerabilities.
Yes, like $1 billion data disaster. Because for anyone managing an international portfolio or tracking global retail trends, you have to understand this transition. Korea is an established industrial economy that is pivoting very successfully into a diversified consumer and tech powerhouse.
But that transition brings entirely new operational liabilities, right?
It does. I mean, achieving scale internationally requires a very different playbook than just defending a dominant market position at home.
So let's start with the triumphs of scale, because frankly, the numbers coming out of the Korea Exchange are just extraordinary. On May 6, 2026, the KOSPI,
Which we should mention is South Korea's main equity benchmark.
yeah,
You can think of it as their equivalent to the S&P 500.
right, exactly. So the KOSPI blew past the 7,300 mark. It officially closed at a record 7,384.56. And to really put the scale of this advance in perspective, it was up 447.57 points in a single day.
I mean, that is a 6.45% jump.
Yes, we are talking about a market adding hundreds of billions of dollars in value almost overnight. It's the second largest point gain in the index's entire history.
And the velocity of this movement, that is what really demands attention here.
Yeah.
Because the KOSPI only crossed the 6,000 level back on February 25th of this year. So it took a mere 47 trading sessions to add another 1,300 points.
Wow, just 47 sessions.
Yeah. And at the aggregate level, the total market capitalization hit an all-time high of 6,058 trillion won, which translates to approximately 4.1 trillion US dollars.
So that's a 75.2% year-to-date gain.
Precisely. Which places South Korea firmly at the top among all G20 markets, and I mean by a very wide margin.
Well, and a substantial driver of that aggregate performance is, of course, Samsung Electronics. They are Korea's largest company and the dominant global memory chip maker. They gained 14.41% in that single session.
Closing at 266,000 won per share.
Right. And with that single move, Samsung officially joined the $1 trillion market capitalization club. So for international portfolio managers, Samsung hitting $1 trillion US dollars, it isn't just a corporate win. It's really like a heavyweight contender officially joining the Olympic pantheon alongside Apple, Nvidia, and TSMC.
Yes, they are only the second Asian company to achieve this.
But with a 75% year-to-date gain in a G20 market, we really have to ask, does this extraordinary advance present an undeniable opportunity for global investors? Or does it trigger serious valuation questions?
Well, it forces a complete recalibration of how you view the semiconductor supply chain.
Yeah.
Because the structural driver behind this outperformance isn't just a generalized economic boom, it's highly specific.
You mean the AI demand?
Exactly. We are seeing this unprecedented AI-driven global demand for high-bandwidth memory chips,
Yeah.
or HBM chips. To really grasp why this matters, you have to look at the mechanics of artificial intelligence.
Right, because AI servers process oceans of data all at once.
Yes, and standard memory chips, they actually create a traffic jam. The processor can compute way faster than the memory can deliver the data. So HBM chips solve this by stacking the memory vertically. It acts like a multi-lane highway directly to the processor.
Which perfectly explains why SK Hynix, Korea's second largest chip maker and the top supplier of these HBM chips for AI servers, also rose 10.64% to 1,601,000 won per share.
The market is pricing in a sustained multi-year capital expenditure cycle by global tech firms. They're all building out this AI infrastructure. I mean, the advance was so rapid that a sidecar circuit breaker was triggered.
For the seventh time this year, right?
Yes. And for context, a sidecar is a programmatic mechanism that temporarily suspends program buy orders. It's meant to cool the market and prevent extreme volatility.
So when you trigger that 7 times in a few months, it shows relentless institutional demand. But we can't discuss this equity rally without looking at the internal mechanics of the Korean market, specifically the National Pension Service, or the NPS.
Right, the state-run mandatory fund that covers most Korean workers.
Exactly. Their total assets just crossed 1,700 trillion won, which is roughly 1.16 trillion US dollars. In just the first 4 months of 2026, they gain over 250 trillion won. That's approximately 171 billion US dollars.
This is staggering.
It is. So how does a single state-run fund impact a rally of this magnitude?
Well, the NPS's asset allocation decisions effectively create a structural floor and occasionally a ceiling for the KOSPI. Their sheer size means their strategic overweighting of domestic equities actually amplifies this tech-driven rally.
I see.
Yeah, when a state-run fund managing over $1 trillion decides to lean heavily into its domestic tech champions during an AI build-out, you get the velocity we just saw. Korea Exchange President Jang Yoon-mo actually characterized this milestone by saying it reflects a fundamental strengthening of the market.
Meaning it's driven by real corporate earnings, not just speculation. So the Korean government has clearly figured out how to capitalize on the silicon side of the economy. But while semiconductors are driving the macro index, looking beneath the surface reveals a major structural change in what Korea is actually exporting to the world.
Right. It's no longer just ships, cars, and chips.
Exactly. South Korea's Ministry of Trade, Industry, and Energy, often called MOTI, just revised its MTI Commodity Classification Code. And this is the first update to this domestic trade classification system in 6 years.
And the specifics of this revision tell a really compelling story. The list of major export items expanded from 15 to 20.
Okay, so what are the new categories?
The 5 new ones are K-food, which explicitly includes ramen and dried seaweed, or Kim. Then there's cosmetics, so K-beauty, plus electrical equipment, non-ferrous metals, and household goods.
Wow.
Yeah, and these 5 categories generated $65.3 billion in 2025. That represents 9.2% of Korea's total exports.
Wait, hold on. I need to push back here because this timeline seems very disconnected to me. I've been seeing K-beauty products in global retail stores and watching viral spicy ramen videos online for years now.
Oh, absolutely.
So given the absolute global dominance of brands like Samyang's Buldak Ramen, doesn't it seem incredibly delayed that it took until 2026 for K-food and cosmetics to be officially recognized as strategic export pillars?
From a consumer standpoint, it absolutely seems delayed. But from a bureaucratic and trade policy perspective, updating the MTI code is a massive undertaking. It requires sustained data validation. And what's fascinating is how this changes the business's daily operations. Well, it's not just housekeeping. When K-food gets that official major export item designation, it dictates policy prioritization and resource allocation.
Ah, meaning real capital and promotional support.
Precisely. A ramen company or a cosmetics manufacturer suddenly get prioritized government subsidies for international shipping. They get fast-track customs clearance and dedicated funding to secure shelf space in foreign supermarkets.
That makes a lot of sense.
A MOTI official actually stated they revised the criteria to align with Korea's economic policy direction. So this formalizes the pivot from solely heavy industry into a diversified consumer export engine. If you are a global retailer monitoring shelf space, from Sephora to Japanese drugstores, this signals sustained state-backed support.
And the momentum is clearly visible. In the first quarter of 2026, exports hit a quarterly record of $219.9 billion US dollars. That is up 37.8% year on year. But they also made a crucial change in how they track the traditional heavyweights, right?
They did. Memory semiconductors like DRAM and NAND and system semiconductors are now tracked separately. Automobiles are also tracked primarily by vehicle type, with powertrains, so internal combustion, hybrid, or electric, as subcategories. And they created a new biohealth code.
I mean, separating memory from system semiconductors seems long overdue if you're benchmarking against competitors like TSMC.
It is definitely overdue. Lumping them together obscured critical intelligence. Memory chips are highly cyclical. They trade almost like commodities. System semiconductors are customized logic chips for specific clients. So now investors can finally execute clean benchmarking of Korea's AI chip revenues against foundry-focused competitors, separating the volatile memory cycle from steady foundry growth.
Okay, so we have booming international exports. But there is a very sharp contrast when we look at the vulnerabilities facing the domestic platforms trying to capture that consumer activity at home.
Yes, and Coupang is the prime example here.
Right, Coupang. They are listed on the New York Stock Exchange and are universally known as the Amazon of Korea, famous for their rocket delivery. They just reported a first quarter 2026 operating loss of 354.5 billion won. That's approximately 242 million US dollars.
And that is their largest operating loss in over 4 years.
Exactly. And top-line revenue still grew by 8% to 12.46 trillion won, which is roughly 8.5 billion US dollars. But total operating costs eclipsed that revenue. costs hit 12.81 trillion won, or about 8.7 billion US dollars.
And the primary driver of this cost is so instructive. It was 1.685 trillion won, approximately 1.15 billion US dollars in customer compensation vouchers. These were issued after a 2025 personal data breach.
It's a textbook illustration of modern platform risk. A single data security incident acts like a financial sinkhole. I mean, it swallows over $1 billion in compensation and erases years of profitability, even while the top-line revenue still grows at 8%.
Right.
So how should global e-commerce investors view this specific risk scenario?
Well, you have to look at the Korean context. Consumer trust regarding data security is highly sensitive. You have a population with near-universal smartphone and broadband penetration. The e-commerce market is saturated.
So a breach is devastating.
Devastating. The reputational damage demands an immediate and overwhelming financial response to prevent massive user churn. So those vouchers aren't regulatory fines. They are the market rate for buying back customer forgiveness.
And there were secondary pressures too, right? Idle facility costs and elevated inventory carrying costs from demand softness. The net loss reached 389.7 billion won, or about 266 million US dollars.
Yes, but the underlying business remains functionally intact. The product commerce division grew 4% to 10.51 trillion won, about 7.2 billion US dollars. Still, Coupang Inc.
Chairman Kim Bumsik noted, even as customers return to normal, the fundamental recovery will take time.
It just shows that domestic market dominance has its limits and risks. To truly capitalize on the K-culture boom, Korean companies must scale physically in international markets, which leads perfectly to CJ Group's latest move. Yes. For context, CJ Group, originally Chiljenang, started as a Samsung affiliate. Now they span food, entertainment, and beauty. You might know their BBGO brand or the film Parasite.
Right. And CJ Group Chairman Lee Jae-hyun is heading to the U.S. in late May 2026 for his first overseas management tour of the year. He'll attend the 10th anniversary of the PGA Tour's the CJ Cup Byron Nelson in Texas, where they run House of CJ to showcase Korean food, music, and beauty.
But the main event is retail. He will visit CJ Olive Young's first global flagship store opening in Pasadena, California.
Olive Young being Korea's leading health and beauty retail chain.
Exactly. And they plan further expansion into Westfield malls in LA. And they already established a U.S. West Coast logistics hub in Bloomington, California in March 2026. Chairman Lee's son, Lee Sun-ho, who heads CJ's future planning group, is heavily involved in this push.
Selling K-beauty online via Amazon or TikTok is a proven model. But opening a brick-and-mortar flagship in Pasadena is a totally different capital game. Is this the ultimate stress test to see if a well-capitalized Korean retail curator can capture physical market share in America?
It absolutely is a stress test. Olive Young isn't just a single brand, it's an aggregator. It's a gateway for thousands of smaller K-beauty brands. This physical expansion introduces a formidable new competitor to the U.S. retail landscape. It tests whether Korean retail concepts can scale internationally in physical formats.
It's a huge shift from just exporting cultural influence digitally.
It is. And as we watch Samsung's upcoming Q2 HBM shipments to NVIDIA to justify its trillion-dollar valuation, and as we wait for Coupang to normalize its voucher costs, the broader question really remains.
Which is?
Can Korea's new cultural exports achieve the same level of entrenched global dominance as their semiconductors?
That's today's AI Prism Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.